In this recording, we are looking at bad debts and bad debts recovered on page number 91 in your resource book, and it is section 15.5. Okay, we have a range of accounts receivables in any organization. Now, in the whole scheme of things, it would be wonderful if everyone that had purchased goods on credit from us had actually paid for those goods or will pay for those goods. But in reality, that doesn't happen. Organizations go into liquidation, individuals go bankrupt, and you are guaranteed that some of the people that have purchased goods from you on credit are not going to pay their accounts. When you receive notification that that organization has gone into liquidation or the individual has gone bankrupt, then you need to write that debt off as a bad debt. You need to do this because bad debts are classified as an expense, and the expense can then be claimed back through your profit and loss at the end of the year. So we've got an example on page 92 where World Travel is owed $16,500, which includes GST, by Trevor Pohl. And the debt has been outstanding for 6 months. So remember, when people don't pay you for 2 months, you start to definitely contact them. When they haven't paid you for 3 months, you start to panic because you think, maybe they're not going to pay at all. You then do take all the appropriate actions, which is what you learned in your previous process financial transactions and extract interim reports unit. After 6 months, you're pretty much guaranteed that that person is likely not to pay you. So World Travel has now received information that Trevor Pohl has gone to Brazil and he may never return. Although they will continue to attempt to trace Pohl, World Travel have decided to write off the amount owing as a bad debt on the 16th of March. So the full amount that they are writing off from the accounts receivable is $16,500. Obviously, $16,500 divided by 11 is $1,500, which means that the actual bad debt that's being written off is $15,000. Okay, so there is our general journal entry for that bad debt. So bad debt is on the debit side because it is an expense. An expense increases on the debit side. GST collected, yes, it's a liability. And we know that liabilities are on the credit side when they're going up, but this is a liability that's going down. We no longer owe this to the ATO because we're never going to receive the money. So it's a liability, and I like to always just say a liability adjusted. Okay, so it's the liability going down. The accounts receivable is an asset, but it is also an asset that is going down, hence it goes down on the credit side. So this is just an extract, so I haven't provided a T account for the bad debt or GST collected, but if we go to post this to the accounts receivable account, it would be on the credit side 16,500. But remember, we also have to post it to the accounts receivable subsidiary ledger account for Trevor Pohl. So that had the balance of $16,500. He's never going to pay us this money. So on the 16th of the 3rd, we were notified that he is not going to pay us the money because he has gone to Brazil. So we have taken $16,500 out of his account, therefore reducing his account to $0. He no longer is recorded in our book as an asset because we have written him off as a bad debt. Okay. But then we're told on page 93 that he's returned from Brazil and he wants to re-establish himself in Australia, and he is going to, and he has paid you the amount of $16,500 on the 2nd of October. Our very, very first step is to make sure that we basically are cancelling this entry that we have here, we have to cancel that whole entry out. So in other words, we've got to put $16,500 back into accounts receivable. We cannot claim our bad debts, cannot claim this as an expense. So we've got to reverse it. So it's bad debts recovered, which we treat it as if it's revenue. So it goes on the credit side. So our bad debts would be $15,000. GST collected. We now do owe this $1,500 to the ATO. So we have to put it back into our accounts. Because if we didn't do this transaction here, it would seem like Trevor Pole owed us no money. But Trevor Pole does owe us the money. So we then go and we post this 16,000. We then go and post the $16,500 back into the account, which is what it's telling us to do here, which means that the balance that we have that Trevor Pole owes us is $16,500. Only once we've recorded that can we go and say, okay, he has now paid us $16,500 into the bank, and therefore we're going to reduce the accounts receivable by $16,500. If we now post that to his subsidiary ledger, we are now reducing the subsidiary ledger by $16,500 because he has paid us the money, and now his balance on his account is zero, not because he's a bad debt, but because he's actually paid for his transaction. You are now ready to complete self-test exercise 8 on page 94 in your resource book.